And this
Okay, this first panel, overcoming centralized points of failure across the DeFi stack. We have a phenomenal panel here, and before we get started, can everyone just give a little intro to themselves and what they're doing?
Yes, it works. Hi everyone, I am Emilio. My name is Emilio. I work in Aave Labs, and I supervise development around the Aave protocol, as Aave Labs is a contributor to the Aave DAO, and we are currently developing the new version of Aave v4, plus a variety of other tools and features around the Aave ecosystem.
Hello everybody, I'm Brenda, and I am with Tellor. We're an oracle, and we're currently developing an L1 as an oracle to reach consensus faster than we have before, and that's pretty much it.
Hey guys, my name is Layne. I'm one of the founders of Everclear, formerly known as Connext. We have been doing interoperability protocols since 2019, and just released a new version about 2 months ago.
Well, guys, Julien Bouteloup, I'm the CEO and founder of Stack Capital. We do investment, venture studio, been in space for quite some time, involved in some of the major also stablecoin like Curve Finance. Yeah, that's it.
Hi, my name is Lucas. I'm a co-founder of Centrifuge. We've had a focus on bringing traditional financial products into DeFi for the last 7 years that we've been doing this. What is now known as real-world assets, right? Like the idea that like you can use DeFi not just for crypto-native assets, but actually like build a better alternative to the financial system overall.
All right, and to start this off, we've all seen the recent election of Trump and the most pro-crypto Congress ever. It seems like stablecoin legislation is well on its way. With this being apparent, what is the point of pursuing decentralized stablecoins in the future?
Should I go?
Yeah.
Okay, what's the point of pursuing decentralized? That is a good question. I mean, like, first of all, I don't think that a pure decentralized stablecoin design exists. Like, or if it exists, it's gonna be really, really hard to find it out, because like, trying to follow and track the value of an asset that is that doesn't belong to the same ecosystem where the tracking derivative is, it's really complex without like having any kind of interaction with the external world where this asset exists. It's really, really hard. We have tried many ways. We have failed in many ways, even spectacularly, like with Luna and everything. Probably a full, truly decentralized stablecoin that can scale to trillions, because right now we are talking billions, but in reality, like, that's a very small number, right? We need, if we want to scale a stablecoin to trillions, a full decentralized design is probably not possible. I do think that, like, we can achieve an intermediate and acceptable solution by mixing up decentralized and less decentralized sources of emission for the stablecoin, and even centralized instances. It is important because like it adds resilience to the system if it's decentralized. If it has at least a component that is fully decentralized, it adds resilience to the system. It's a component that cannot be turned off or like manipulated by a centralized party and so on and so forth.
Mm-hmm. Yeah.
I think that's exactly the point. Like, what is the point, or should we continue to
if it's going to be socially accepted,
we should continue to pursue this. This is the whole point of crypto, is that it's supposed to provide an alternative of what we already have. Yes, if we're always using an underlying asset that is centralized, that is controlled through a centralized party, it is very difficult to achieve. But what we have achieved up to now, it's also, at one point in time, was thought that we were never going to be able to achieve. And we have solved problems over time that have allowed us to get to this point. I think, what is the point? It's, you never know what could change in government. And that is the whole point of crypto. Right now, it seems like we're going to get some regulatory clarification. Whether or not that happens is still to be seen. And who knows if the clarification is for or against, and or even enforceable. And then if it does become very clear, can it be the worst case scenario? It becomes the unofficial, official CDBC, and that's not what we want. I mean, I imagine that that's exactly what we're not trying to rebuild. Like, if we wanted that, just leave it up to the government to do it. Anyway.
Yeah, I guess from my perspective, I agree, like, there's no real way to build like a fully decentralized stablecoin. But the reason why I've stayed in this industry for almost 8 years at this point is because I think it's important that this is the first time that individuals have really been able to fully participate in the construction of a financial system. And I think that it has such power over people's lives that it's worthwhile to pursue. And even if it's not fully decentralized, like, is making strides in that direction so that it's more auditable, it's more transparent, is extremely worthwhile, even if it's not achieving all of the pure goals that we wanted it to when we set out.
Well, I completely agree with you. I think it's giving more value or accessibility for people to join. Like, centralized finance is something that is not quite easy for people to join or participate in. So with DeFi, it's quite easy. And I feel like it's just an evolution of the course of finance. CeFi in the 80s or 90s, if you look at the books or history, was also seen as the cool kids, you know, trying to disrupt the financial industry. And now DeFi is seen as the cool kid and CeFi as the bad guys. But it's just the course of the evolution of technology. I
mean, I think I was one of the first 100 people to mint DAI when MakerDAO went live, and actually, Maker was probably after
Psy.
Yeah.
Not for the old.
I still hold
Psy.
I still hold Psy.
Yeah, it's simple. It's actually above DAI. It's worth more than DAI.
Oh, yeah, it's better. It's a better stablecoin. It also actually was maybe more decentralized than DAI. But no, I think, I mean, Maker was the first, after Ethereum was the first thing that made me really excited about crypto. I think the idea of a decentralized stablecoin is super important, and it's like something we need to experiment in. I think if you look at it, like, the world that I think we'll be in is going to be, like, there will be centralized stablecoins, but a centralized stablecoin will never truly be global. I mean, the US dollar right now is kind of a global reserve currency, but there's many, many countries that don't like that. I think if we look at what this will look like in DeFi, like the best bet we have of really creating a global financial system without any borders is if we manage to go beyond that. Now that is like a very like extreme, or maybe not extreme, but like far future version, and I think, yes, we're really not ready yet. But like looking at this technology, it's like 10 years old. The internet is 30 years old today. More actually, way more, 50 years old. So like that for me is like, just imagine where this can go. I think it can go quite far.
Wait, you said that a centralized stablecoin will never be global, but right now you have Tether, USDC dominating. So do you see their position maybe vulnerable in the future? So you think there's opportunity to overtake them?
Well, do you think that the Chinese government will gladly put their foreign currency reserves into USDT?
No.
Yeah, so
that's what you mean. Yeah.
That's what I meant with it. Yeah.
So you think they'll just so do you think there'll be like thousands of stablecoins out there, like different options that people can choose from?
I mean, I think probably there will be many stablecoins, yes. And I think the good thing about DeFi is it makes, like, DeFi is 100 times more liquid than like our traditional system. So actually, like, swapping between those is going to be much simpler.
Yeah. And I think like monetary policy for each country is what preserve security of a country. So I think what we'll see is just the minting of not new type of new currency, but just stablecoin of existing currency
Mhm.
for each country. That's how they can remain competitive and protect incentive for their own country.
It's like a monetary firewall, in a way.
Yeah, I mean, yeah.
Yeah. Moving on. So, in terms of centralized points for stablecoins, there's collateral equality, which is a huge point of convergence. Emilio, what kinds of collateral would you deem safe? Does it make sense to pursue anything that isn't USD equivalent? When you explore new types of collateral, what do you look for? And what novel forms of backing would you like to see in the future?
Okay. I'm not a risk manager. So
Okay.
Whatever
that's
I
an
say is
important,
not.
yeah. But like, I mean, it depends on which angle we are looking at the matter. So as a developer of decentralized technologies and like if we want to pursue decentralization, the safest assets that you can imagine are certainly the ones that are the purest in terms of from a decentralization standpoint. So on Ethereum, for example, I don't think there is any other better collateral than ETH. That's the reality. And if you want to minimize the point of failures that the system you're developing is exposed to, both in terms of technology, in terms of decentralization, in theory, you should never move out of ETH as collateral.
But
because
I mean, Black Thursday showed us that correlation is as big of a risk as any other. Like,
yeah,
tech
no, but
risk.
I'm talking more about from a technical standpoint. So, like, for example, Wrapped BTC already has a different degrees
Risk, yeah.
and different risk exposure for a protocol like Aave compared to ETH, right? ETH is an asset that cannot be centrally manipulated. Of course, there is like the volatility risk that's inevitable, kind of, but from a decentralization standpoint, from technical standpoint, like you should never move out of ETH as collateral if you want the purest, safest, less risky platform to use a collateral. That's one angle. That's why I mentioned there are different angles to it. Then there are a variety of other aspects that you need to evaluate, like centralization dependencies, liquidity on the market, nature of and quality of the price feeds, and nature of the asset itself. So for example, crypto and crypto derivatives are one category. RWAs are another category. Stable coins are kind of RWAs as well. But like they have a bit different dynamics, so we can put in even a different category and so on and so forth. So I can talk about this for 5 hours.
What do you think about multi-collateral?
Multi-collateral like Aave,
Like
for
you're
example?
saying, yeah, like you're saying, like stick to ETH or like whatever your ecosystem is. Like within that ecosystem, do you think there's any?
Well, you know, like Aave, for example, supports 20 different collaterals. I don't remember the exact number now. And all of them have different trade-offs. And they are in Aave because like there were risk managers that evaluated the trade-off, decided like a set of risk parameters that kind of basically define the exposure that the protocol gets to those assets, and therefore these assets can live together. Sorry?
Do you like that better or not? Or you're still
Do I
sticking to ETH?
Do I like that better? I think it's a necessary evil, because if you want to scale, if you want to give possibilities to as many users as you can to use the platform, the technology that serves for them a purpose, then inevitably you need to expand the possibilities for users, and therefore this increases the complexity and from a risk management perspective a lot. But I do like it, yeah.
Yeah. What do you think?
No, I like it.
Yeah.
I mean, in general, like when you build your portfolios, you do diversify as well because of risk. And so when you say like just ETH, if that's like your ecosystem, I feel like, well, you could, but then you go back to, so anyway, I
Yeah. Do you have any thoughts?
Well, I'm just curious, like, what vectors do you define having the biggest impact on risk? Because if I think of like stablecoin collateral, for me, like one of the big impacting factors is like, okay, well, what's your like total supply of the stablecoin? Because if it's massive, then ETH becomes pretty poor collateral, and then you take on additional centralization risk, but at least you're able to like sell things off without devaluing your collateral.
Yeah.
And for everybody, I was looking at you.
I mean, again, I'm not risk manager. I can I can answer because I've been following this for a long time. But like there are other people that probably have better insights than me. In any case, like there are a variety of aspects. So, for example, centralization dependencies is one that is very strong and very important. I don't know if you have probably followed like the wrap BTC, like the whole the story around it and the change in the structure behind it and the involvement of Justin Sun and so on and so forth, which causes a lot of like a lot of huge kind of discussion within the space, and like some maker wanted to change the parameters. Aave didn't want at the beginning. Now maybe they want. We do. Like it's hard. So centralization dependency is one aspect that can be very very relevant in evaluating if an asset can be good collateral or not. Liquidity is another aspect. So for example, there was the issue with CRV a few months ago, and that's a different kind of risk that needs to be evaluated. It's really, really a lot of dimensions to look at. Yeah.
I don't think that it's, I mean, I do think multi-collateral is a little bit better, but I think it also has to do with the goal of the stable coin. So if its primary goal is it's ease of transaction or off-ramp, becoming an off-ramp, then you can, you know, if it's an off-ramp, then definitely like, you know, whatever the coin you need to off-ramp to, it's probably a good choice. But then if it's for ease of transaction, then I think multi-collateral or anything that reduces the risk and volatility, then it's probably better. But obviously, complete opinion, and I'm definitely not a risk manager.
Oh, Lucas, what novel forms of collateral have you seen at Centrifuge, or where could you imagine backing stablecoins in the future?
I mean, a few years ago, real-world assets were the novel collateral, and I remember, like, I mean, it was quite interesting because, like, so if you ask like the first like 20 people that worked on MakerDAO, like 2016, you know, like it was always a big like diversification was always a core pillar of like the risk management approach, right? But also no one had an idea of how you actually would bring diversified collateral on chain. Like first there was ETH, and then I think like just maybe like 5 other tokens that you could use. The fact was those tokens were also correlated to ETH that you had no diversity at all, like no real like diversity at all in your portfolio. Then like came stable coins, and then like, I mean, I think multi-collateral DAI was live for like 2 years before the first real-world asset came. And that took us a long time. In the beginning, I mean, the market changed a lot because we went from like a zero interest rate environment where like whether you held treasury bills or USDC on your balance sheet as a stablecoin didn't really make a difference. I think like short-term treasury bill yields were like 0.5% at the lowest time, or maybe even less. So like, there really was not that big of an incentive to kind of look for these kind of assets. So like Maker and Centrifuge experiment with private credit was hugely risky. We all made like we learned a lot of stuff, and ultimately I think the main thing we built was just building the legal infrastructure and the like understanding, and honestly just proving to people that this can be done at all. Now like the interest rates changed, and of course like everyone moved into treasury bills, because if you don't, then you are losing out on 5% a year, right? Well, where do we go from here? I think from a like traditional financial products, like what a lot of people are, well, a lot. So some of the people that are thinking about what's next are talking about is like basically debt products, like not going all the way back to like the most exotic, like tiny asset classes that we like experimented with in the beginning. The beginning, it was the only way to do this stuff was to do it at like $5 million in size. So like you had to pick very small stuff. Like now we have like several billion in kind of real world assets on chain. So like we can actually go into, say, like investment grade credit, and you'll make like maybe 1% more than treasury bill rates, right? Which is like substantial. Like for Maker, that's like, for Sky, that's like millions of dollars a year in extra revenue. So I think we're going to go there. And then I think, but ultimately, I believe that every financial product will be on chain, and therefore also could in theory be used as collateral in DeFi. It's just a matter of like going down the path of like starting with treasury bills, commercial paper, credit, CLOs, private credit, whatever else, right?
Yeah, it's a spectrum of credit.
I don't know, at Tesla stock or SpaceX stock, I'm still waiting to see when equities are actually going to be traded on chain. I think we haven't cracked that yet, and I think it's mostly a question of liquidity.
Yeah, and I think we could agree with you, and very like the real asset aspect of DeFi. But I think as a space, we quite failed in building a strong stablecoin. Because if you look, so it was Bitcoin, then it was Ethereum, and then as a DeFi, we tried to build a stablecoin that was basically using USD, rather than actually being or continuing the work of what Maker started, which was using ETH and BTC without being correlated directly to US dollars, but because of simplicity or something that is easier to build or scale, then we start adding USDC, USDT in order to scale. But this, I think, it was a major mistake in the sense of the true value of this ecosystem. So having new type of assets like real world asset, like bonds, ETF, and those structured products, I think it could potentially become bigger than, or the goal is to have something that is not entitled to one stablecoin, to one monetary policy like US dollars, and having something that can be used across the globe without being backed by one country or one political aspect of the society. And I think, having more diversification of assets, being able to back a stablecoin is what we actually trying to build here as an ecosystem. But for some reason, raising capital or becoming one of the largest products, some people try to go shortcuts and then use something that is easy.
Maybe, and I talk about real world assets, but I would also say, like, if we look in the crypto native space, there's not a lot of assets that aren't like that I'd say like you could value on fundamentals and look at from like a purely revenue perspective. And I think until that changes, right, like you won't solve the correlation issue. You'll always have huge variability. Like the number of crypto projects that have like significant.
You can go back in the 80s, like gold and all that.
Well, okay, yeah, that's a real world asset again. But if we think about like the crypto, like the equivalent of what like equities would be in traditional financial system, right? Like you look at like tokens in DeFi projects, like or in crypto projects in general, like it's like ETH, it's Maker, it's Aave, like that actually have revenue. It's just 3 examples, right? But like the number of these kind of projects that have revenue that you can look at and say, well, like this is good collateral, not because it's like people speculate on it, but because there is like a fundamental value behind it. I think that this number is still just very small, right? And I think, and most of these still have like very huge volatility and are mostly like priced by the market based on like future potential and not like actual revenue. And I think when that changes, then you'll have interesting collateral that is completely uncorrelated, that isn't an off-chain like traditional asset, and I think that's going to be really interesting.
Yeah, Layne, Everclear did cross-chain transfers and everything. So, with more and more chains coming online, liquidity fragmentation is an issue. What are some ways that this can be resolved?
With the number of chains that are coming online and expected to come online with all of the RAS providers and everything, the best way for it to be resolved is for token issuers to adopt standards like XERC20 or the new one that Optimism just came out with. Those standards really allow bridges to mint and burn the tokens directly instead of having to pool liquidity in some form, either by like solvers fronting it or like liquidity pools or anything like that. Like scaling that across hundreds or thousands or hundreds of thousands of chains just doesn't work. You're really going to need to update how the money moves just at the base layer of the token definition.
What centralization risk does that bring about?
That don't already exist?
Yeah.
I mean, well, it depends, like, how much do you consider upgradability a centralization vector? And, like, how much would you be willing to get rid of it? I think that, like, my personal opinion is it's probably more dangerous to not have that in a lot of the systems that are being used today than to, like, just have it and have like a defined process, time-locked upgrades or things like that. I think our process as an industry for defining upgrades could be improved massively. Like one thing that I was just talking about recently is how it's crazy that so few protocols use opt-in upgrades. Like to just auto-upgrade everything so that the implementation changes and there's like no choice by the downstream consumer is crazy and like anti-pattern for the rest of how software is used. So I think that upgradability is, you know, it's something that people say they would like to not have until it's really needed. And I think the technology right now is a bit too immature to not have it.
Yeah. Emilio, do you have any thoughts on liquidity fragmentation? Doesn't even have to just be cross-chain transfers, but on-chain itself.
Well, this is an aspect that we have been evaluating a lot with Go, because we have like a full like multi-chain infrastructure that is canonical for Go. And the idea behind that is that we had observed through previous experiences when Aave went multi-chain. It was really, really painful in many ways. One of the most painful that I remember is that very often it happens that you go to a new network, this regarding the Aave protocol specifically, not Go. Go is a little bit different. You go to a new network, you inevitably need to list assets that are in general most of the time breached from Ethereum. So those assets, for example, are stablecoins. So you list on Aave stablecoin USDC that is breached from Ethereum, right? Then one day Circle comes and say, you know what, today we are start minting our canonical version directly on this network. So now what happens? You have two versions of USDC. You have the bridged version, and you have the native version.
Well, you could have multiple bridged versions.
Exactly, we do like we had at the beginning. Like there was a strong like position to not list any bridged asset that was not the native one, because like if you start listing multiple versions, then it really becomes a mess, you know. So once Circle start minting natively, then what happens is that everyone starts to push liquidity towards the native version rather than the bridged version. So people that had supply, there is water coming from somewhere. Yeah,
It's liquidity.
So what happens is that like you kind of need to incentivize users to migrate from the bridged version to the native version. And if you have a user that was on Ethereum originally, and it doesn't have an easy way to off-ramp from the network where you are on, you are forced to basically sell your native for the bridge, and then bridge is a terrible UX, like honestly, really, really terrible. We ended up in this situation in many cases. It was even worse. There were even worse scenarios with multiple versions, multiple native versions. Some places was a mess. So like when we were thinking how to approach multi-chain Go, like we were like, okay, we need a canonical version right off the bat, and not like something, we cannot start bridging within native bridge and then have a different version that are not interoperable with each other. So at the time, like we evaluated the options, like what the most reasonable option at the time, like it provided already a whole full infrastructure for Ethereum to the destination network from multiple layer 2s or sidechain, and then we decided to use CCIP, which we are currently using, and this gives us the benefit that we do have one canonical version that is directly controlled by the Aave DAO in every network where Go is available. This comes with complexities, of course, because like there are a lot of different aspects that you need to evaluate. Then, like how is CCIP actually managing under the hood, like the transfer? How do you manage like the fact that Go can only be minted on Ethereum? And if you start minting on other networks, the accounting become a mess. I mean, again, I could speak about this like for 5 hours, but like.
Yeah, and that's a problem that we're all facing in DeFi. As we saw the landscape change, that's exactly the reason Tellor has moved or is moving to its own L1. It's because of liquidity fragmentation and the dependency of having to have a bridge or even a proof for the token, and having the same issues of like, do we want to do another token? How would we track the minting? But anyway, everybody's dealing with that, and everybody's dealing in a different way. I think a lot of the app chains or app that are not dealing with like stable coin stuff, I think that's one of the reasons you see a lot of us going to our own chain to sort of.
I think, though, that the viability of that strategy of just like, okay, you know what, we're going to use CCIP for our token, and our token is going to be the one that's minted by CCIP, starts to like go away when you get hundreds of thousands of rollups, because then you're dependent on CCIP to get your native token to all of these new app chains, when realistically, if people want it, they can bridge it there and get a version of that then you're
That's
right
one
back
idea,
at square one.
Yeah, but also, like you will have thousands of roll-ups, but how many of those will actually have meaningful liquidity where it's actually business-wise reasonable for the Aave DAO to actually go to that chain? That's another aspect. So that's why,
Right.
many angles to it.
Yeah. Moving on, Julien, what role does governance play in stablecoins? While it may help decentralization, does it also hinder development and service?
Yeah, I think we've seen in Maker or Right BTC, the centralized governance or decentralized governance, both aspects that I think governance is super complicated. What we've seen over the past few years, I'm not sure if you remember, but in conferences before, like I think it was 2 or 3 years ago, people could pitch any project and mentioning, oh, it's a new DAO, this project uses DAO or whatever. Now no one is actually mentioning that name anymore, because it's more like we want from decentralized autonomous organization to decentralized autonomous chaos, I would say. So it's
We're back to DAX.
Yeah, it's like DAC.
Or DAO where there is only one guy.
Yeah, so, and then, but it's fascinating because we thought that decentralization or DAOs will basically solve the problem of governance, and we were even trying to pitch this to central banks and European Commission, European Parliament. You should use DAO, or even for a country, in order to govern the country, you should use DAOs. It completely failed. And what's fascinating is we went from, okay, each individual can then vote for protocol updates or decisions in risk management, into delegating voting power for the people that get the most money. So what we want is, actually we brought a system that is even more, it's not only more centralized, but also it's a transparent bribing mechanism where you bribe people in order to make a decision for yourself. So I believe like even the US election or the French election or whatever is actually more more transparent and more equal in the sense of voting, because you have one individual that can vote. Or in DeFi, now it's more like driven by massive entities or incentive platform that basically distribute rewards for people to make a decision in order to update, list an asset, or provide incentive or yield for an asset. So we get requests from big players like USDT, USDC, or whatever, that are trying to bring high yield into liquidity pool. So then they are willing to incentivize, and people that have those governance tokens, they then make decisions not necessarily based on what's the best for this ecosystem, but what's the best for their own bag. So we move from a good value to centralized, selfish value, I would say. So it's very difficult. It's very difficult. I'm not sure, like, you have what will happen when you like it or not, but like, for example, WorldCoin, all those type of initiative, when you have one ID per person, will actually become something that you are forced to vote and not being able to delegate your voting power. So we've been testing everything. So far, I think, of course, we've seen some good outcome and bad outcome of those decisions, but operating a decentralized governance on chain is super complicated and brings more chaos and toxicity than actually bringing value. So yeah, I'm looking forward to seeing any new attempt to on-chain governance, and also truly believe that if you want to build, and this could probably be a good feedback, but Aave as well, but for example, Curve or other project, if you want to build a project, you need super strong centralization from the core team, because the problem is like the team who's building the project is completely away or far away from the people using the product in terms of incentives, because people, retail players, they're mostly incentivized by short-term return, not necessarily long-term success of the protocol, where the people building the project, they are here for the long term. So by nature, it cannot work out. So you need to find features that bring mutual incentive across the entire stack.
But that was the point of VE tokenomics, right? To align token holders with the builders.
Yeah, but to do that short, medium, and long term in a couple of different phases, it's really difficult. And that's why we've seen projects that, plus people raising shit a lot of money, like then they are not necessarily, then the core team is not incentivized to build, and then you have people that hold the token. So it works on both sides. Sometimes you have the holders that hold the token and they want the project to be built because otherwise there's no value. But then the founders, they don't necessarily have incentivized to build it because they already have the value. So it's complicated.
Yeah. Lucas, from your experience at MakerDAO, what are your thoughts on governance and stablecoins?
Hi. So, I mean, I used to attend the weekly governance call at Maker for many, many years. And not anymore. I think I'm not as pessimistic as Julien.
That's not pessimistic. I'm saying,
Or maybe I
I mean, tell me one DAO that have succeeded. None of them, except you could consider Bitcoin and Ethereum. Are the only two
they have very different
DAOs that succeed. Yeah.
No,
Huh?
They're not DAOs.
they're not.
Well, I
DAOs?
consider like DAOs because
I
they
don't know.
actually the
Why?
miner and you can make decisions and update in a decentralized way. So that's why we consider they are the closest one to DAOs.
I would agree.
It's like implicit decision
Yeah, I
making
think
process.
it's actually implicit governance where people build like public governance, but it didn't work out. Yeah.
I mean, I think within Maker, right? Like there was a lot of back and forth, and like going into details, I think would take 2 hours. But there's a lot of back and forth of like how do you decide? What do you vote on? Where do you abstract like things away into subgroups? How do you present decisions? How do you do polling? I agree. Like it's been really hard to actually come up with a model so far, and I think most DAOs have failed. If I think of like the things that have worked in Maker, I would say it's been like having a relatively consistent like schedule. I think that was always very good. People knew when to vote, and actually there was a decent amount of participation compared to most other DeFi protocols that had voting. I think there's still like it's mostly influenced by like a very small set of large holders. I think a big problem though is like the people that are able to participate in governance today. So I used to like in 2020, I used to talk to all of the like top 10 largest MKR holders. Those were like all the big VC funds, and then the SEC started enforcing there were several lawsuits, not just by the SEC, that went after like large holders that were participating in governance. There wasn't a lot of certainty around if you participate in a DAO, what liability do you take? And suddenly, most of these VCs stopped voting. It even went as far as they stopped delegating. So then you had this problem that now, who is left to vote? It's maybe a couple of core team members that own enough and are willing to take the risk, and maybe are not in the US, are not financial institutions that have a lot of this regulation. And so then like that that I think was like a huge loss for DeFi in general, because now the people with the most long-term, well, you had the core team, but outside of the core team, as you said, like retail token holders, they don't have the, maybe they don't have the experience, they don't have the time, or they don't have the resources to kind of really build an opinion. Whereas like if a VC fund buys tokens and plans to hold it for 5 years, has an operational team of like 15 people, like a couple of them like just thinking about DeFi and DAOs, right? Like they would be the ones that are qualified to make these decisions, except for they oftentimes can't do it anymore, or don't know the risk they're taking, therefore they don't want to do it, because if you're going to get into trouble and you're going to have to explain to your investors why you did something like that, it's going to be a really tough conversation. And I think that is actually one of the biggest issues I have with DAO governance today, is like institutional holders can participate, so a lot of the large holders can't really weigh in, and so that skews all of these decisions a lot.
So it's even worse than centralized governance.
Yeah. I mean, it's much safer to be a board member in a publicly traded company than to vote on-chain.
Yeah. Emilio, what are some of the biggest risks to stablecoins right now that people aren't talking about? And what are some stablecoin risks that could be there in the future when we reach 500 billion in market cap, $1 trillion market cap, and beyond?
Well, I think like the risk, the surface for risk and issues doesn't necessarily scale. Like you can have the same kind of risk whether you are 1 billion or 500. It's just that the explosion will be much more
bigger.
Yeah, the ripple effect would be much bigger. But like, I mean, if we talk centralized stablecoins, the issue is always the same. So what Tether is doing, we cannot audit, we cannot see. We just need to trust them, that they say that they are reinvesting and they have enough cash, and whenever there is some FUD, the price starts to drop, and someone does like that, we don't know who is, like does market making and so on and so forth. That's like unfortunately inevitable for anything that is fully centralized like Tether is, and it's a major risk because like it's basically the same risk that we face every day with institutions and banks and investment funds and so on and so forth. That's why I mentioned before that like maybe we cannot have a fully decentralized stablecoin, but a stablecoin that has multiple issuers, like, and maybe controlled by a DAO. So for example, like the maker design. So you have multiple issuers controlled by a DAO. Part of it is decentralized, so that part cannot fail by itself or is not necessarily influenced by the rest. It's backed, for example, by decentralized crypto collateral. That's why I prefer towards something like Tether, which is basically like a financial institution that can do all the worst crap that we have seen in the past other institutions doing. So that's one major risk for sure.
Brenda?
I think one of the big risks that we're not talking about is that the bigger they grow, they have a bigger risk of actually becoming or either governments or requiring them to get a bank charter, which they control, which they can also control or mandate reserves, interest rates, and further manipulate how they operate. So the bigger we get, I think that's a big risk that we need to address, or at least acknowledge.
Yeah, I think I read something about like, I don't remember if it was the Chinese government or the US government concerned about the fact that Tether has so much money that they can buy so much debt that they can actually become a problem for the government itself. I think I read something like that. So that's probably something that they can scale with, like having a private institution like Tether having 1 trillion or 500 billions of liquidity they can reinvest in a debt of a government, which basically they buy the government. It could be complicated.
I think Tether is one of the 100 largest buyers of U.S. short-term treasury bills.
Yeah. So
I think that was a year ago.
I can see a government like having concerns about that.
But wouldn't the U.S. government want? I mean, Tether's a black hole for U.S. Treasuries. Isn't that a good thing for the U.S. government because it's like an infinite
Yeah.
buyer?
But it's like grayscale.
It's
If,
like
if they start dumping,
Yeah.
It's
they
like
crush
what,
your debt. Essentially.
What EOS did actually, raised the
Oh,
money
yeah.
and then bought the
Don't
U.S.
remind.
Treasury to get protected. I mean, I'm not sure, but
Yeah.
something like that.
Yeah. So I guess that's it. We're out of time. Thank you so much, everyone. Thank you, Stable
Thank you.
Summit.
Thank you. Thank you.